Hey everybody, it's Chuck Barone. Wednesday, August the 30th, 2023. A day of calm before we get a whole bunch of data coming up the next couple of days. Actually, the markets had a happy day. We had a little data trickle out that filled the markets with joy. So the market's rallying up today. Before I get rolling, let me welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys showing up every day. Okay, let's talk about these markets today. Tomorrow starts the deluge. Tomorrow and Friday being just a ton of really important data coming that'll affect not only markets but the perception of things, which is really what's driving markets right now, about what's likely coming next from the Federal Reserve, which is all that's on this market's mind right now. But today was a good day. ADP coming out today with a jobs report that warmed the market's heart. So the stock market rallies again today. Another good day for the stock market, with the Dow up 37 points, sitting at 34,890. The S&P up 17 points, 4,514. And the NASDAQ up 75 points, back up over 14,000 at 14,019 points. So big days. The S&P up over 4,500. The NASDAQ up over 14,000. You guys know these round numbers tend to be resistance numbers. It's like with the Dow coming up on 35,000. We'll see if that can break through that soon. We'll see what the data we get. Bond market today, a nice quiet day on the bond market, the way it's typically done, right? 10-year flat today, not budging an inch, sitting at 4.12%. The 2-year falls 1 basis point, 4.88%. There you have it. That's a normal bond market day. Not a lot. Now, there's a little bit of news. I guess the Federal Reserve putting some pressure on smaller banks, regionals, to toughen their supervision, meaning toughen lending standards, and to increase reserves. We'll see where that goes. I'm sure there'll be more news on that coming out. The dollar today, dollar down back under now, well under 104, sitting at 103.17. What's next for the dollar? A rally back up above 104 or back down under 103 or less? Obviously, with the dollar coming down is usually a good thing for gold and silver. Not so much today, though. I think these markets have been having their own little temper tantrums over the state of things. Still holding good numbers, though. The Dow, or the gold price, up today, $3.80. Sitting at $1,941 even. A good price for gold. Silver down 11 cents today. So, I mean, it's really been rallying like crazy. Still sitting at $24.59 per ounce. So these are really good numbers for gold and silver. They're numbers that are off their peaks, but pretty close still. And as this dollar comes back down to earth, as we get this realignment, I guess, around the dollar, we'll see gold and silver continue to rally, I believe. Oil today has another good day, up again, up 56 cents per barrel, sitting at $81.72 for a barrel of West Texas. I'm surprised. I thought oil would be trickling back down. It has been, honestly. It peaked back up over $86, was back around in the 79s. I thought would be heading straight back down below 75, but still a little bit of life left in this rally. We'll see if it's really got legs, or if it's kind of just a head fake, suck up some poor unknowing people's money before it sinks back down to its $70 to $75 trough. Bitcoin today, after a huge rally yesterday, down $613, sitting at $27,266 for Bitcoin. Still a good solid price. I was reading the Wall Street Journal today. The SEC loses another case against Bitcoin. This Bitcoin ETF, it looks like a lot of companies want to start these ETFs. Looks like they're going to get away with it, even though the SEC is trying to attach some regulations on Bitcoin before they create these ETFs. Apparently not going to be able to do so unless they hurry up, because it looks like Bitcoin ETF will soon be a reality as the SEC loses another case against that. All right, so let's talk about news today. The only real news was this ADP jobs report. Now, these guys are notoriously outrageously off every month. But for some reason, their report carries some weight in this market. So today they come out, they say demand for labor is starting to shrink pretty sharply. They said in August, 177,000 jobs versus last month's 371,000. Market's happy. They like this because this is one of those when bad news is good news kind of deals, right? Where, the markets don't want the economy too hot because they feel like that's going to just encourage the Fed to continue to raise rates and keep rates higher. They don't want a recession either. They want this perfect scenario, which they've been managing to get for the most part. We'll see. We'll see. We'll get the true number on Friday. Well, at least the government's number, the true number we have to go by. We'll see how far off ADP is this month. Now, when you combine this stuff, though, with this downward GDP revision we'll talk about, it kind of shows that the stuff that's been on the Fed's mind, keeping pressure on the Fed to continue to raise, has been a red-hot jobs market, and a red-hot economy is still growing in spite of the Fed putting the brakes on as much as they reasonably can, raising rates from 0 basically to 5.25. So now we're at this reflection point. We're going to see, guys, it's going to be very interesting the rest of this week, the numbers that actually come. We're going to have a lot to say about that and what it really means. As it stands right now, as you guys know, the market is completely discounting a Fed rate cut in September. I still feel like we're going to get one. If they're going to continue to raise rates, why wait? Why wait? Now, news like this continuing to trickle in, if this trend continues, maybe the Fed will have an opportunity to pause here. But any little blip in all this beautiful, perfect music we're hearing so far can upset the whole apple cart. So we'll know more by the end of the day on Friday. GDP, as I mentioned, revised down for the second quarter. They had reported 2.4% growth for the second quarter, revising that down now to 2.1%. So they actually report a little higher than it is. But tomorrow, or Friday, I guess, one of these days, we're going to get, I think Friday, we'll get the jobs report for August. And we'll see, then we'll get GDP. Well, that's what we're already getting. We'll get this jobs report. We'll get an idea because the GDP Now tracker showing above 5% growth in the third quarter so far. We'll see if that's even remotely accurate. So anyway, these numbers revising down, further adding to the happiness in the markets, because taking a little bit of pressure off the Fed to continue this super, series of hikes. News you guys need today, just a couple of quick ones. Visa and MasterCard, our friends, the greediest of the greedies, continuing to raise their fees to merchants. Another big rate increase coming to merchants for their swiping fee or whatever they call it. Going to add over $500 million to their bottom lines. I mean, these guys, poster children for greed. There's no reason for them to be raising the fees to merchants right now when merchants are struggling, consumers are struggling, everybody's struggling except Visa and MasterCard, right? Just the greediest greed. Here's the more signs of this greedflation stuff. Now, at the same time, ATM fees for banks also climbing. Biden and his administration have tried to do something about junk fees. Obviously, an exercise in futility at this point. But banks now did, cut back on some of the fees that were the most outrageous there. Negative balance fee, $35 if you bounce a check or try to make a withdrawal that's over your limit. Some of these other junk fees, banks late charges that were outrageous. So banks just adjusting. So they've now have rating. I read today that banks have collected $4.7 billion just on out-of-network fees charged to people who use, like me, I bank with one bank. If I use another bank's ATM, everybody wants to charge me fees for that. Junk, garbage fees. You got to pay $5 to take out $100 of your own money. They want to charge you 5% juice, man. What kind of bullshit is that? So between these guys, setting new records for amazing greed. Corporate debt. I was reading, this was not good news today. Forgive me. Corporate debt now starting to look a little bit shaky. High yield bonds, high yield debt defaults spiked 4.2% last month. So high yield debts, now these are the shakier bonds, these are shakier companies. Nonetheless, not a good signal, right? So far this year, we've already had more corporate default than we did the entire year last year. So things really, we're on the slope down the hill and things start to escalate now. Corporations having trouble paying their bills. It's going to only continue to get worse because, corporations have bonds out there. They have debt out there. These bonds have a lifeline of, just like the government, 2 years, 30 years, whatever. Well, guess what? When they're rolling that debt over, because nobody ever pays anything off, right? When they're rolling that debt over, they're rolling it over at massively higher rates, increasing the cost to carry that debt in a huge way, affecting their bottom lines, which of course gets passed down to us, the schmuckatellis out there, right? Us, the working people. And now even with all of that, corporations having difficulty paying their bills. And to wrap things up today, this one made me chuckle a little bit. Now you're starting to see investment houses and banks. You'll see this now as you read the news or online or wherever. Banks warning against holding too much cash or cash equivalents like money markets and savings accounts. So what's happened is, as the yield on these type of risk-free investments has gone up above 5% in a lot of cases, investors pulling money from the bond market, pulling money from the stock market, and taking a no-risk 5% or more. Hell, not a bad play, especially for a certain percentage of your portfolio, especially if you're a person who is, not a multi-millionaire and looking to preserve your principal like we've preached on this show nonstop since day one. Invest conservatively. Well, then what could be more conservative than a money market? I'm seeing CD yields, short-term CD yields over 6%. Well, a lot of investors feel like that's a better play for them than putting their money in the stock market where prices gyrate up and down and they have to watch that every day. Even the bond market, in spite of a nice quiet day today, which has been going up and down like a friggin' yo-yo. So we'll see if the big shift is underway and how the market's going to react to that. Fascinating stuff, guys. We're really living in interesting times. Anyway, that's it for the day, guys. We'll be back again tomorrow to bring you guys the news you need. Big day tomorrow for data starting up. Can't wait to see how this all shakes out. Bond markets have been on a roll. So let's see if it gets to continue tomorrow or we're confronted with something else. Anyway, guys, that's it. As always, we appreciate your support. We really do. If you like what you're hearing, please hit the like button. It changes things around for us, gets our video in front of more people. Hit me up in the comments with your questions, concerns, you want to make fun of me or whatever. In the meantime, have a great evening, guys. We'll be back again tomorrow. Until then, take care. Thanks.